Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. Today, Palantir is closed above $28, $28.42 to be exact, for the first time since October 2021. I've got a lot to talk about in terms of some of the macroeconomic implications for why this run is happening. I also want to talk about some of the things internally going on in the company for why this may be happening. And then I want to actually give my broader thoughts of what this price action means given Q2 earnings is going to be in about 1 month from now. A lot to talk about. Incredible day for shareholders. Let's get into it. All right, so let's start off with Palantir's price action. I mean, we've got to acknowledge this is just incredible in terms of what we're seeing right here. $28.47 after hours, $28.42 on the day. In the beginning of the day, when Jerome Powell was speaking and testifying in front of the Fed, in front of the Congress, which we'll talk about in a second, we saw Palantir kind of teetering from $27.75 to $27.95, and that 20-cent range, it kept going up and down, up and down. After Jay Powell spoke and the broader market got to condense what he had to say, you had the S&P 500 right here, 561, up about up 0.99%, up 1% today. Absolutely incredible. New record high for the S&P 500. You had NVIDIA get back to 135. You had Tesla take a little bit of a breather, but at one point Tesla got to 267 on the day, closed at 263. And then obviously you had Palantir break through that $28 level, not closing at 28.02, 28.03, not like a light close above 28, but trying to close in on 28.50. I mean, it's just incredible to see some of the price action. If we go back over the course of 4 years, you can see the last time we were at $28 was right around this October 2021 time when the stock was at 29, 28, and then obviously started to make its decline for the next 18 months. And a lot of us that had discovered Palantir at that time, we had to deal with that. But you go through a lot of the bad points. At one point got to $5.84, $6, and you just keep working, you work in, things change, you realize that this is a real company, the street ends up rewarding you. And now we are here back at $28.40 on the day. It's pretty incredible. Two things I want to acknowledge real quick, and then I want to get into the macroeconomic reasons for why this is happening, and then talk about my thoughts moving forward. Number one, I think the most important thing to acknowledge right now is that Wall Street missed this rally. And I think that's part of the reason for why this rally is happening. So Palantir is up basically 70% year to date, 182% since the DPO. Wall Street missed it at 6 to 10. They picked Snowflake. They picked enterprise SaaS companies that focused on taking their analysts out to steak dinners. Literally, I've talked to some of these SaaS companies that when Karp says steak dinners, I mean, he's not joking. They literally go out to steak dinners. They try to wine and dine you to get a better price target. Wall Street did not focus on what transformational enterprise software companies required, but retail did. So now they have to buy it almost 500% above what retail was able to buy it at because they didn't have the advantage. What was the advantage that retail had? Retail had a community. A community. This is the community on Twitter and YouTube and all these different platforms that came together to crowdsource information daily when the stock was in the gutter to prove that we were not wrong. Watching every single Alex Karp interview to try to figure out, is this guy actually crazy or does he have a plan? Like, what's going on here? All of us work together to bring as much information as possible to reaffirm our core thesis. And the funny part is Wall Street will probably be buying in now. And given Palantir's potential, even Wall Street might end up being early because if we thought $5 was early, if this company becomes what we think it can become, maybe $28 is actually early over the long term. Why do I bring this up to start off the show? The reason I'm bringing this up is because part of the reason why I think Palantir is surging is likely institutional FOMO. Now, I could be wrong here, and this could be more retail FOMO than institutional FOMO. FOMO, for those that don't understand, fear of missing out. Institutions feeling, okay, we missed NVIDIA, we missed AMD, we missed Microsoft this year, we missed Google this year. We need AI exposure. We need software applications that give us AI exposure, not just hardware infrastructure. I'm going to talk more about that in a second. What's left? Palantir. And that's why, again, today, for about a couple hours in the trading day, Palantir was the only green SaaS name. Snowflake, Datadog, Intuit, Zscaler, CrowdStrike, all these other names were red. And that has happened many times over the past couple of months. And it kind of feels like the market's expecting something out of Palantir in terms of its performance. And that's why they're giving them a bit of the premium while other SaaS companies are taking a haircut. So I just want to start off the show by saying retail was able to get this right back when this was much cheaper. Wall Street got it wrong. And I feel like part of the reason we're seeing a bit of the squeeze here is because Wall Street's finally FOMOing in, essentially, because they feel that they want to be part of the story as well. Now, again, I could be wrong here, and maybe this is purely a retail-driven rally. 100% I could be wrong, and I'll be discussing that even more. But if I'm not wrong here, and if it is kind of a Tesla rally in terms of, I don't think Tesla moved up $300 billion in market cap over the past 2 weeks because of retail. I think institutional investors came in. If Palantir, which basically moved up about $25 billion in market cap over the past month, if that's happening because of not retail but institutional, then that is also very good news for the stock, because it means institutions are probably seeing a long-term story. And if they're seeing a long-term story, they're probably going to want to be a part of that long-term story. Now, let's talk macroeconomics. So part of the reason that Palantir is probably going up outside of just the institutions wanting to get a piece of the story is likely because of the macro. The macro we saw today has been pretty incredible. Jerome Powell, I watched his entire 2-hour testimony, so you don't have to. And for those that were with me in the market open, I'm sorry you had to go through that as well. But we got to see Jay Powell basically get lectured at by a bunch of congressmen in the United States. Now, out of all those 2 hours, there was one part that really mattered. And the part that really mattered was when Jay Powell said, personally, I'm like quoting him here, not exactly, but he said, personally, I feel the labor market is weakening and it's tightening. It's not in a horrible situation, but it is tightening. And because of the Fed's dual mandate for maximum employment, they need to take appropriate action if they feel the labor market is tightening. And so if Jay Powell himself, he's not speaking on behalf of the Fed, he made it very clear he's speaking on behalf of himself, from a subjective perspective, feels that the labor market is weakening. And tomorrow, if we get a CPI report, CPI will be out at 8:30 a.m. Eastern. I'll be live at 8:20. And it's a CPI report that is cooler or in line with expectations. So we're hoping for a 3.1% year-over-year growth. Then that means you've got unemployment going up. We're already at 3.4 to 4.1 over the past 6 months. And inflation coming down. The inevitability of that is a rate cut. Why does this matter? I believe the S&P 500, the NASDAQ, a lot of these stocks reacted, the indices reacted today based on what Jay Powell said in that Fed testimony, and also based on their assumption that CPI is going to be cooler than expected. I'm not saying the CPI got leaked, but they probably feel like the CPI is going to come in cold. You put all that together, along with that institutional FOMO I talked about, plus the tailwind of AI, which we'll get into in a second as well. All three of those things is a perfect recipe for Palantir to go higher. Plus, here's the fourth thing. Palantir was kind of coiling up over the past 6 months from $22 to $25. And if you got a lot of catalysts, you got earnings coming up, and you got a good macro picture turning out to be a tailwind and momentum for the broader markets, then yeah, the stock's going to surge higher as well. Not just Palantir stock, but a lot of different companies are going to get some more momentum. An example is Enphase. Enphase got a horrible report. They're a microinverter company for solar panels 2 weeks ago. Stock fell from $140 over the past month to $98. It's up about 4% today because rising tide lifts all boats. That's probably, I hope that's the right metaphor. But the point is, a lot of stocks benefited from that, and Palantir is one of those companies. So I think that's important to understand, because if we're getting into a rate cutting cycle, which that first rate cut probably is going to be in September, not going to be in July, and we have the CPI data, meaning the inflation data, to support that the Fed needs to cut rates before things get out of hand. If you don't cut rates and unemployment starts kicking up, that means earnings is going to suffer. What is the basic example of this? Well, if people don't have a job, they can't buy things. Advertisers are not going to start advertising on Facebook if people aren't buying things from those ads. So we will clearly see in Facebook's numbers in the next couple quarters, if unemployment gets to like 6-7%, that the advertising revenue is not there because the economy is not good, because the consumer is weak. Right now, we are not seeing any of that data. We are seeing a consumer that is in one of the healthiest shapes I've ever seen. And we're getting a lot of data from a lot of different companies. The TSA in the United States said that 3 million people on Sunday passed through the TSA check. 3 million people on a Sunday went to travel. I mean, people are spending money. They're going on vacation. The companies that have not done that well in terms of Walgreens or Nike with the consumer, they're having their own consumer problem. Costco, Walmart, they're doing great. Costco just raised their prices on the annual membership by $5 and $10. That no one's going to cancel their Costco membership to pay an extra $5 or $10. That's only going to help Costco at the end of the day. So the consumer so far is strong. The Fed wants to keep them strong. Keeping them strong means we need to have a labor market that is not weakening. And so on more signs of the labor market weakening, which is good for inflation coming down, we get the inevitable cut. That rate cut is so important for a company like Palantir. Even though we have no debt, we have $4 billion in cash. It just makes the economic activity of the broader world, to be honest, especially when America, cuts rates, because America's economy leads the entire world, to do business. And it's easier for a company to procure Palantir software if the cost of capital becomes lower, because now they're more easily convinced into getting into a deal with Palantir, a pilot into Palantir, and that leads to broader growth for Palantir. So from a macro perspective, it's very important to understand the tailwinds we got today in terms of the Fed, potential CPI that comes out tomorrow, and then the broader S&P and how the market reacted to what the Fed said and what Jay Powell said, led to a lot of stocks going up. Palantir was one of those stocks. Now, having said that, that was my macroeconomic reason for why Palantir is going higher. I've talked extensively over the past couple of weeks as Palantir has run, why Palantir has also gone higher from a substantial perspective and in terms of what's going on with the company. My core argument here is that I really do think the market is looking for software applications of AI. And if they are not finding any real software use cases of AI, again, we talked about that famous Sequoia article that came out a couple of weeks ago saying, hey, we spent all this money on AI startups, but we're not seeing the use cases. Why didn't we just buy NVIDIA stock? Why is NVIDIA selling all these GPUs if there's not any real use cases of AI for these models that are being trained on to actually deliver value to the end consumer? The broader market is waiting for what is the $1 trillion use case for AI in the enterprise. And it is my belief, and my belief for why Palantir is surging right now over the past month, that the market has decided maybe Palantir is one of the companies, Palantir is going to have to prove it is one of those companies, that is the beneficiary ultimately of AI in the enterprise, and they're going to win as a result of that. Oracle partnered with Palantir back in April. So I said I would talk about this today. I am going to talk about it now briefly. Oracle partnered with Palantir back in April. Yesterday, they officially solidified their partnership. So right here, Palantir executive Josh Harris says, together with Oracle, we're helping our global customers take advantage of the latest innovations in cloud computing and AI while meeting the regulatory performance and security needs. VP of Oracle says Oracle's powerful and flexible cloud infrastructure combined with Palantir's decision acceleration platforms helps customers rapidly scale AI capabilities across its operations. This will enable customers to get the most value out of their data while meeting their sovereignty and security standards. Palantir's Foundry and AIP is now equally distributed across Oracle's cloud, AI infrastructure, and sovereign AI capabilities. What does this mean in a nutshell? Well, it essentially means, hey, Oracle, which tried to buy Palantir for $30 billion back in 2017, and Karp and Thiel were like, no way, Palantir now worth double that, so obviously it was not the worst decision. Oracle tried to work with them a long time ago. Oracle tried to acquire them. Oracle does not work with third-party vendors as easily. I was talking to one of the Oracle employees back at the AI conference in DC that Palantir was sponsoring, and I asked them, hey, this Oracle partnership, what do you think? And he was like, dude, I worked at Oracle for 5 years. I tried to convince my bosses to work with all these third-party vendors. They are very strict with security. Oracle is a top-notch business. They just don't work with any regular data company. Like it's an integrated ecosystem, and if you're part of that ecosystem, you quite frankly have earned the trust of Oracle. What does that trust mean? Well, that trust means that Oracle is now going to be able to offer Palantir's Foundry and AIP to 300,000 enterprise clients that use Oracle. That doesn't mean Palantir is getting 300,000 clients overnight, but that does mean for all those clients that need a data analytics platform, that need an ontology, that want some type of AI in their enterprise, they have the ability to access Palantir, and it further helps consolidate Palantir's go-to-market strategy, which is incredibly important. I don't think that's the reason the stock is surging, but that is another catalyst that I think the market is putting together in terms of, okay, so Oracle is trusting Palantir to work with them. And on top of that, one of the most important words in that PR that we just read from, sovereign AI. Essentially the argument that governments that defend Western values, and Oracle is a proud supporter of Western values. That's another reason why I think this partnership is very synergistic. Oracle's argument is like, hey, we are working with Palantir to provide not only the distributed cloud infrastructure, but the data analytics on top of that cloud infrastructure for sovereign, independent AI. What that means is Sweden, France, Germany. I know Germany has some beef with Palantir, and France thinks they can build their own Palantir. But when those countries start realizing, hey, they actually need something like a Palantir, they have the ability to integrate Oracle's cloud with Palantir on top of it. So the exciting thing here is that if you do believe there is a massive government business coming just through NATO, which I believe will happen over the next decade, because I think every NATO country is going to need something like Palantir, then Oracle's combination with Palantir just further enhances that go-to-market, that distribution strategy. And now if countries are using Oracle, they have the ability to use Palantir because it's synergistic with Oracle, and because both of those companies together protect the governance and security of sovereign AI. That is something important that's happening with Palantir, and that is one catalyst off of a string of different catalysts that have happened over the past couple of weeks, which I think has led to the surge. What are some other couple catalysts? We talked about yesterday, the Athenia platform got some more recognition. That's one of Palantir's industry operating systems for semiconductors. Palantir hosted AIPCon. They announced they did over 1,300 boot camps, about 900 just in this year alone. They also got a $480 million contract with 31% of that contract guaranteed in terms of Project Maven, and they had no competition for that contract. They got another $33 million contract from the government. They got a $19 million contract from one of the youngest public health agencies in the United States. I mean, we've seen catalysts over catalysts happen over the past couple weeks. Plus, we had a really good macroeconomic landscape over the past 2 weeks, which is why I spent some time talking about what's going on in the macro. You put that macro with these catalysts, plus the overall tailwind of getting exposure to software applications, not just chips, but ontology, as Karp says, ontology over chips, software applications of AI, there you go. Palantir is the one that's waiting to be bought. So now I want to talk about what happens in the context of the stock. And I'm getting a lot of messages right here of like, hey, it's ridiculously overvalued. It's run up way too quick. Or, hey, do I put some money in right now because like I missed it at 14 and I want to get exposure. I think it's going to $50. Should I buy it at 28? I think to all of those people that are asking these questions, the number one thing that's important to understand about Palantir is what is your long-term thesis on Palantir. If you think it's going to 50 tomorrow and 28 is a good deal, by tomorrow I mean in the next 6 months, then okay, take a bet and buy it at 28 and hopefully it goes to 50 if that's what your perspective is. If you feel it's ridiculously overvalued and you have a $14 average and you think this is run up way too quick and you just can't handle the fact that it's run up too quick and you want to sell because you think you'll get a better chance to buy again at 14, 15, 16, you think it'll drop that low so you can time it and so you can sell the top, get the bottom again, okay, then sell it. I think people make these things too complicated. If you think Palantir is going to $50, then sure, at 28, it's a great deal. If you think it's going back down to 14, then it's a great deal to sell if you're up 100% right now. For me, I make these questions that I've thought about obviously for a long time as I've been covering the stock and developing my own position. Wait a second. Do I believe this company is going to be a triple-digit stock over the next decade? Personally, I do. And so if that's the case, my number one goal is not to worry about can I get it at $28 and sell so that I can get back in at 15. My number one goal is to not to think, oh, in 6 months it's running to 50 because the technicals show blah, blah, blah. And so, and by the way, I do love technical analysis. I think it makes a lot of sense. I'm learning a lot of technical analysis. But if your argument is, well, it's going to run to 50, so I need to get in right now to make a quick buck, or I need to sell at the top so that I can get at the bottom, I think these are mindsets that are just not helpful for being long in a generational company like Palantir. And that's not to say valuation doesn't matter. That's not to say entry point does not matter. Obviously, if Palantir was $100 today, I would say it's egregiously overvalued. It doesn't make any sense, right? But I do feel there is nuance to all these discussions. The one thing that there's not nuance to is if you're long, you kind of just don't care. You're just here for the ride. I mean, if you have an average of 14 and stock's at 28 right now, right? Let's say the stock goes to 35. If you're not selling, it's just a fun roller coaster. It could come all the way back to 21 and you lose all those gains that you had on paper. You might feel bad that those gains are gone, that you're not going to be able to get 2 burgers at Wendy's tonight. You got to settle for 1 because on paper you're starting to feel like you're broke again. But at the end of the day, if you weren't planning to sell at 35 because you felt that the stock's worth a lot more in the future, and I'm not going to try to time it and get in and out because most people can't do that, quite frankly. It's a very difficult thing to do. Then it's just not that big of a deal. If you weren't planning on selling and recognizing profits and then paying taxes on those profits, then I don't know what there is to complain about. I think you got to just sit back and enjoy the freaking ride because this is a generational company and it's a fun time to enjoy the ride. Having said that, do I feel the stock has run up incredibly quick and do I feel like it could be more macro-driven than it is company-driven? 1,000%. Who am I to say that the macro is not the reason why Palantir is going up and it's actually not just like internal things in the company? Like, yes, of course that could happen, which means in Q2, if we get a really crappy earnings and Palantir doesn't raise guidance and the customer can't, like all the arguments for why metrics are bad, if that takes place and the stock falls back to $20, like, yeah, that is a very possible scenario. And I think it's important to recognize within all the bullishness of the stock that it can fall. Tesla went to $1 trillion and fell to 400 billion twice. Like we've seen Tesla drop 60%. We've seen Amazon drop 80%. We've seen companies drop massive amounts even though they've had a good run. The question to me, which is the only question that matters, is if you're long the company, do you get excited if it goes to $20, if it goes back to $15, because I know I would be incredibly excited to get an opportunity to get shares like that again after I've seen the potential of what the market is willing to pay given the growth that Palantir has put up? Or do you get so scared because you feel like you missed out on easy profits when the stock was higher and you could have made that paper money turn into real gains? It is simply a subjective question about how you conceptualize your relationship with this stock. And that's always what it's going to be. I've had people messaging me that saying, man, I sold too many shares at $21 and now I want to try to get back in. And I've had other people saying, man, I missed it at $21. Now I'm trying to get in at $28. For those both groups of people, the question is the same. The answer is the same. What is your personal relationship with this company? Do you actually have an understanding of what this company is offering? Are you just watching my videos and you're bullish on Palantir, or are you taking the time to do your own research and be like, okay, Amit's a good resource, but here's my conviction around what I feel about AlexCarp, Palantir, ontologies, and all of this stuff? Or do you just like want to make a quick buck? And either or is fine. I have no judgment for people that are just trying to flip this thing if it gets to 35 and they get in at 28. But then you've got to deal with the fact that if it doesn't pump to 35 on earnings, if we don't raise guidance, if adjusted operating margins stay flat and it goes down to 22, 23, you're bag holding that stock. And are you willing to DCA? Are you willing to take that L? Are you willing to hold on to a company, or are you willing to just let it go away? I think a lot of people that watch the channel are pretty smart when it comes to Palantir. And most people that I know have held on to the company. The reason they're sitting on astronomical gains is because they've held on and they've increased their position. They have such a margin of safety because they were buying low that they've been able to increase their average without making their average too close to the current share price, right? Because they've been able to get more shares, which I think should be the ultimate goal. The average doesn't matter that much. But because they had a small average, they've been able to average up without still giving up a majority of their gains. And so if you believe this story is not done, and in fact, we're just getting started with this story, and this government business is going to be massive, this commercial business is going to be massive, AIP hasn't even really started monetizing yet, they're just getting customer count. If you believe in a leader like AlexCarp, if you believe that you need a mother effer who can get on that earnings call and paint a vision and paint a story and get the world to invest into that story, even if that story is not perfect yet, then I think you hold on for the ride and have the ride of a lifetime and gain a lot of good friends and, quite frankly, priceless relationships like I've gained as I've been covering the stock. But if you're in it for the short term and you're so scared about losing on your paper profits or not getting enough profits because you didn't get in and you have no exposure, then you really just need to ask yourself, what do you care about when it comes to Palantir? And if you care about DCAing and you feel like 28 is a great price to DCA down, then by all means, this is the time where you get excited to buy more stock. If you feel like you're sitting on way too many shares, it's overweight in your portfolio, you're up 200-300%, you want to take a little bit off the table, you want to recognize some of those gains because you think you know Palantir and you think you know the valuation, you think Palantir will fall back to $15, then sell some stock. Like it just does not need to be super complicated. The only way you make this very easy is by telling yourself, I believe in this company over the next decade. I'm going to give them a decade to see how it plays out. Most investments take about 10 years to really play out, especially good investments, not just investments that you're trying to make a quick buck on. And so you just let the story play out and see what happens. I think that's the easiest way to think about this. And the reason I'm spending a lot of time on this on the end of the show is because we went through the macro reasons for why Palantir is up. We went through the company-specific reasons as why the Palantir is up. And now we have to deal with the fact that if the macro gets worse or if earnings sucks, Palantir can go down. On the flip side, if the macro gets really good and we get 2 rate cuts, and we get really good inflation data coming down, and Palantir crushes earnings and they raise guidance up a couple percentage points, then you're looking at a stock that is going to possibly be above the $28 range that it's at right now. So you've got to be okay with both scenarios. My simple argument is that if one scenario happens and it's the downside scenario, I don't panic, especially if the thesis doesn't change. And I will evaluate the thesis when we see the downside and I will see, okay, well, why did it sell off? Is there something here that's really broken? Then I need to reevaluate my entire position. Or is it just a stock that ran up really quickly? Wall Street took their profits and like this gives me an opportunity to get more shares. It'll be a decision at that time. Or if it runs up at 35, I'm not really interested in selling. I'm just like, all right, that looks really good on the Robinhood account, and we'll see what the hell happens in the next 10 years because that's what we're gonna end up dealing with. Because that's how I've mentally made this decision in my head. That is not how I feel about every stock, by the way. There have been stocks where I've gotten in and out very quickly because I don't care about holding that stock for a long time. I made a couple $1,000. All right, let me make some money. Let me get out. Palantir is not a stock I have that relationship with. And so it really is up to you to determine what is your relationship with the stock. And based on that relationship, you can then make the appropriate decision on how you want to engage. But if you're long, and you've had a fun time owning Palantir, because over the past couple of weeks, it has been really fun to own this bad boy, then you might feel a little bit like me, which is a tweet I put out today. I really want to give my kids these Palantir shares one day and let them know how hard their pops worked to buy them when it was a sub $100 billion company. Your pops was in his 20s, grinding, sleeping 5 hours a night trying to get these shares. And then if they ever sell Palantir for some stupid 2040 version of a meme coin, I will literally disown my kids and I will never talk to them again. So in my head, I want to give these shares to my kids. Like it's one of those things where I think they're going to be worth a lot in 2040, and I could give them to my kids and it'll be a fun story. But if you just want to make a quick buck and make some profits, then that's also fine as well. But if you've been long, it's been a fun time to be long Palantir. All right, that's it for me. Thank you everybody for listening and watching. First of all, this is the most amazing community in the world. If you got to the end of the video, comment cowbell. Actually, comment miso soup. Comment miso. I want to see who got to the end of the video. I think it's like a 30-minute video or something. Miso soup. I made a joke on the market close today, and I said, everyone's talking about this cup and handle on Palantir, this like cup and handle technical analysis term. And I was like, look, even if that cup is a cup and handle, I just hope it's not a ramen cup of noodles. I hope it's a cup of miso soup, because seeing Palantir close above 28 makes me so happy. I thought it was a good joke. Now, I overly rehearsed the joke before I went on the market close, and so when I delivered the joke in the market close, I feel like the delivery wasn't the best, because it kind of felt like it was overly rehearsed, and when the joke feels overly rehearsed, it doesn't hit as good as it needed to. But I did ring the cowbell when I made that joke. So comment cowbell, comment miso soup. Let me know you got to the end of the video. I love you guys so much. I saw all the comments in the previous video yesterday of everyone saying, hey, you're really awesome for breaking down the analysis, and thank you for being a common resource in the community. And first of all, thank you guys for coming back and watching every day. I mean, I know I speak really fast, and sometimes I move my hands around too much, but I really love doing this. It's the coolest thing in the world. I'm in grind mode, and when there's news on Palantir, which there has been news for the past 3 years, you've got to be in grind mode to cover that news. And this is kind of the part of my story where things are heating up on the stock and the company, and you got to cover it. And it's just exciting to be a resource for people. It's exciting for people to care about my analysis on the company. And hopefully, if this story really plays itself out, then we're going to have a grand old time over the next decade, because I think this is a special company, and it could fall back down 30-40%, or it could go up 30-40% from here. I think there's something greater than a 30 or 40% move to the upside or downside from this price. And for that reason, it's exciting to be long and hopefully be a valuable resource to everyone who watches these videos. All right. Thank you, everybody. Appreciate it. Let me know your thoughts. I'll see you guys on the next one.